Hello, everyone. Thank you very much for joining our AMA session. We're going to be talking about crypto taxes, and what an exciting topic this is. As we come into the end of the year, and many of you I know are sitting on top of a lot of profits, and you want to make sure you do things right. We have a lot of information, a lot of things you can act on right away that protect yourself against significant changes with the IRS. So, before we get into what those changes are with the safe harbor plan and the new 1099. I want to first introduce my colleague, who is the director of crypto calculations, Ben Weber. I want to say hi, Ben.
Hey everyone, thanks for joining.
So we're all on vacation. I want to say Ben's calling in from Ireland. I'm calling in from Victoria, British Columbia, and we're excited during this holiday season to be talking to you. Before we get started, let me tell you a little bit about CryptoTaxAudit and who we are if you haven't heard about us. We are probably the premier crypto tax calculation firm in the US. And the reason I say that is because we don't just do the gain calculation. We don't just prepare tax returns, but we defend people's tax returns in audits. And we are undefeated before the IRS. We have defended 50 audits before the IRS for crypto calculations. And 40% of the time, we get refunds back for our clients who have come to us to do their audits. And the second thing is, some of those have actually gone on the tax court. 4 of the cases have gone on the tax court, and we are undefeated. And now, it's one thing, to talk to a surgeon who's learned how to do a surgery. It's another talk to somebody who's actually done the surgery. And we've done that. We are the experts in crypto tax. A lot of the online services, the do-it-yourself services, have not actually taken people through the audit into the tax court session. So when we talk to you, we're talking about things that really work. Secondly, we prepare tax returns for people who crypto auditors, crypto investors. It's the only type of tax return we prepare. We prepare using a bulletproof methodology where we add additional things you wish were in there. If you knew in advance you're going to get audited, and it really works. Our audit rate we had none of our 4,000 tax returns have been audited, and that is so far below the national average. It's incredible. And the third thing that we do is we actually calculate your gains from trading. Now, we do this on a manual approach. We don't just rely on a tool. So if you're used to using a DIY, do-it-yourself tool, you've probably banged your head against the screen, trying to figure out how to get the numbers right. Well, we take all that worry off of you. You give us the transaction records, we calculate the results. And we stand behind those results. And the proof is we're winning a tax court with those results. So that's who we are. If you want more information about us, you can go to CryptoTaxAudit.com. If you want us to do your gain calculation, tax prep, we also have an insurance program where we can defend you if you do get selected for an audit called Guard Dog, and you can learn more about it on our website. So that's a little advertisement about who we are and our credentials for actually having this conversation. The IRS came out with new regulations for how they wanted crypto gains calculated. They came out with these in 2023. We, being a part of the Circa IRS conference, as well as the Digital Chamber of Commerce, we responded to those both with the Digital Chamber and individually. And we raised the issue of they were changing the way crypto taxes are calculated. And we say, hey, look, people haven't been using that. They're using the old guidance. You need to provide us a way to transition from the old way to the new way of doing crypto gain calculation. And as a result, in July of this year, they came out with the final regulations, as well as a plan called a revenue procedure that does a transitioning of your old way of calculating it to the new way. So let me just lay out what's happening. Most everyone, including all the online do-it-yourself website services like TokenTax, ZenLedger, CoinLedger, Crypto Tax Calculator, all these services allow you to calculate using different parameters. And as it turns out, they were using the guidance that the IRS issued in 2019 on their FAQs. Well, the IRS, with their new regulations this year, have reversed themselves. They've changed what their advice is on how to do gain calculation, and it's retroactive. That's very significant. It's retroactive. It means if you use any of the online gain calculation services, I shouldn't say any, I'll break it down for you. There are certain settings that some of the services allowed you to do, which would match what the IRS is doing, but these were typically not the default settings. We'll get into what those are. But I can say this, that if you use Zen Ledger, Token Tax, Coin Ledger, or TurboTax or TaxBit, they're the same product now, all those gain calculations are incorrect based on this retroactive application of new gain calculation method from the IRS. They're all incorrect. The remaining services are probably incorrect because of the defaults that you selected. But those other services have the ability to cope and change to match the new IRS requirements. So I'm sure all the services will adapt themselves for next year, but you need to take immediate action to protect yourself. The IRS said if you, this revenue procedure said that if you take certain steps, then they will not apply the gain calculations retroactively. So this is very, very, very big, all right? Because their new calculation methods will generate higher tax, higher penalties, and interest on prior year's audits. So just do this. So here, I'm about this is the summary for this call. You need to go to our website, CryptoTaxAudit.com/1099, and we offer a free allocation plan. The IRS requires you to sign up for an allocation plan and formally prove that you signed up and adopted this plan by the end of the year. Merely saving it is not good enough. You actually have to adopt it, and we provide a mechanism for you to adopt it. We basically do a right signature, electronic signature of the form. You get a copy, we save a copy. IRS gets nothing. Very important. IRS gets nothing, but at least you have a timestamped plan. Secondly, and Ben's going to talk about this in depth, you need to take an inventory of the actual coins and tokens that you own here at the end of the year, like December 31st. By then, you need to inventory all the coins that you have. The purpose is that we're going to, and we'll explain this more in the next year, because I don't want to get too complicated, but we basically identify what we're going to set a new baseline for what your existing coins and what their tax basis will be going forward starting January 1st, 2025. So that we have a website, CryptoTaxAudit.com, 1099. It's going to be on your screen. We have a number of FAQs. We have links to the authoritative documents from the IRS. We have a video that explains everything. But the bottom line, don't think about this too hard, is sign up for an allocation plan today while we're on this call. Secondly, listen to Ben about what it takes to do a documentation and just keep it simple to document your coins you have. So that's basically what's at stake here. Why you need a safe harbor allocation plan is to protect you. I have one client who we did a evaluation on. If we recalculated his gains in 2017 using the IRS's retroactive rules, it would result in approximately $1 million in additional capital gain. Added to that will be penalties for not accurately reporting it, as well as interest. So this could get into hundreds and hundreds of thousands of dollars for that person. So you need to protect yourself. Everyone needs to protect themselves. Even if you don't think you did a lot, it doesn't hurt. There's no downside for signing up for a safe harbor allocation plan. So if you have any questions, I'm sure there's a lot of questions coming in. My staff are manning the comment block, and they're going to start putting in questions. And Ben and I are going to start handling them from then. But before that, Ben, can you speak briefly about what's involved in taking an inventory?
Yep, exactly. So, like Clinton said, the two key points before the end of the year are to agree to or adopt an allocation plan, which you can get on our website. And then you have to take this inventory snapshot. Both of these have to be done before the end of the year. So if you're finding this all very confusing, just follow these two steps to make sure that you're in compliance and following the safe harbor, protecting yourself for the prior years. And then in the new year, you can get all your questions answered and we can figure everything out then. So the second point there with the inventory snapshot, this is basically you're trying to look at your portfolio of each wallet or account. So if you go into your Coinbase account, you go to your portfolio view, and you want to take a snapshot or an inventory of your assets on December 31st of this year in just a couple of days. So if you have one Bitcoin there, you're gonna show one Bitcoin. If you have one Ethereum, you'll show one Ethereum. Now the best practice for this is to just take a screenshot. This way you're not scrambling to write things down. A screenshot is, it's kind of like hard evidence. If you're able to try and get a timestamp in there, if you're taking the screenshot on your computer, you can just get the timestamp at the bottom right-hand corner of your computer, of your desktop window. You want to make sure that, if you're taking it in Coinbase or, any of your centralized exchanges, try to have an identifier that that's your Coinbase account or your Kraken account. If you're taking snapshots of your wallets, you can go, there's a couple of ways that you can do it. You can log in directly into your wallet, look at your portfolio and take the snapshot there of each asset and how many of each asset you have in that wallet. Or you can go to a blockchain explorer, like Etherscan, for example. There allows you to see the portfolio. Again, you want to get the timestamp in there as well as each asset and the amounts. Important, when you take the snapshot on December 31st, do not make any more transactions until the next day, until January 1st. This is important because if you make transactions after you take the snapshot, your portfolio balances will be off. We or you are going to be using this, total inventory count or snapshot to actually do the allocation in the new year. So once you've reconciled all the transactions through December 31st, 2024, in next year, 2025, we'll take all that calculated cost basis and actually allocate it to your inventory as of December 31st, 2024, using those snapshots. So it's important that no transactions take place after you take the snapshots. Again, this can just be a screenshot, make it simple. And then just make sure, again, no transactions after that, and you'll be good.
Okay, just two comments. We're going to start handling questions that people are already submitting, and we're going to answer those. But I want to just summarize. Sign up for the allocation plan right now. You go to our website, do it. It's just an e-signature document. It doesn't go to the IRS at any time. Secondly, you want to remember here at the end of the year, celebrate how well you've been investing and do the inventory snapshot as been discussed. Now, a couple of things. There's a lot of other questions about how is this allocation being done? How do we do the mapping of cost basis and all this stuff? And we're going to have future AMAs next year to answer those things. All the companies like CoinTracker, CoinTracking, ZenLedger, CoinLedger, all those companies are all working on tools to help make you easy. But what's going to happen is we're going to have to load in a new baseline calculation. And we're working actively. Cointracking.info has been contacted us. We're working closely with their development team to develop tools which will make this import of an allocation map easy. And we're helping them. We're willing to work with any of the other 8 firms if they that do gain calculation. If they'd like to work with us, get the benefit of our expertise in how the transition plan will work. In a way that we can do it in a way that defends people if they get audited. So if you are one of the other developing those firms, crypto tax calculation firms, you can certainly contact us at our website, and you can speak with Ben or I. We can start to have a discussion and be of assistance to you. Also, I should make it very clear that while your past gain calculations are incorrect, not because of those services I mentioned, but rather because the IRS has changed the rules. They've retroactively changed their guidance, and we need to respond to that by signing up for this allocation plan, right? So with that being said, let's go into our first question.
Can you manipulate time and date on your screenshot? How is this considered ironclad? Well, you just want to have proof and evidence that you took this on before January 1st, 2025. That's the requirements of the revenue procedure. It has to be done before January 1st, 2025. So by having a screenshot in there, you're showing that of the timestamp, you're showing that the date and time is there. Now, of course, this could be manipulated. Why would you want to do that? I'm not sure. I think, just try to be honest, try to do your best, and get that screenshot with the timestamp in there. If you can't get the timestamp in there, save a separate document that explains all of the screenshots that you have and that shows the time and date that you took the screenshots, just to be safe on the safe side.
I should mention, it is possible to modify that, but if you get audited, they're going to audit the safe harbor allocation plan to make sure that you could prove the physical inventory you had, which means if we were representing you and we got the documents from you and they had been modified, if you had modified them and then we provide them to the IRS, these would be fraudulent documents. And if they detect that they're fraudulent documents, then you could immediately go into a fraud situation, which it can be one of two ways. One, it could be treated as criminal fraud, which is subject to up to $250,000 penalty and 3 years in prison, or it would be a civil fraud, which would be the additional 75% penalty on taxes owed for that amount under audit. So it's basically, yes, you can create fraud, but I would highly recommend against it. It would be easier for us to explain that this particular snapshot was taken on January 2nd, but that we can prove that nothing really happened in those 2 days, rather than for you to fraudulently misrepresent it. Okay? Next question.
Hello, I have a ledger account that is completely in the long-term capital gains. Will safe harboring inadvertently cause them to be short-term capital gains, since I don't have a cost basis other than a transaction date on cold storage? This would not cause them to be short-term capital gains. What we are trying to do with the allocation and the snapshot is to take the cost basis of the assets that you hold going into year 2025 and allocate them to your actual inventory. Now, our safe harbor plan actually allocates the long assets that were acquired first, or the longest held assets, to unhosted wallets, so your cold storage wallets. So with the safe harbor plan, we would actually be allocating the long-term capital gains cost basis to that ledger account. Okay, we can go to the next one. What transaction software do you recommend? Trying to think ahead in a couple years. If needing your help, I'd like to have software you're familiar with. There's a lot of good softwares out there. Some people, like others, more. I think they all have, their, pros and cons. We actively use cointracking.info. I find them a great tool for professional accountants, but that might not, reflect with everybody else. So, there's a couple of other good tools out there like Coinly and CryptoTax Calculator. I've used them before, and I, from a individual perspective, I've liked the feel of those. So, there's a lot out there. They constantly change. A lot of them allow you to set up free accounts to test out. That might be what you want to do.
Let me make a comment on that, Ben. I should say that for your taxes that you're going to do for the 2024 tax year, which you do next year, you're still going to use the old method of gain calculation. Okay, so you don't have to worry about that tool for doing your taxes this next year. And all the tools have strengths and weaknesses, and some of the things that we look for in our decision-making process have to do more with accounting-related issues that may not be as relevant to you. If someone does come to us to do gain calculation, we're going to start over from scratch. We're not going to take your number. So just so you know, and some people have asked, well, why would I want to use a professional service gain calculation, a full service gain calculation? Let me give you an example. I was talking with a guy who was using a service just earlier today, and he said the CryptoTax service that he was using was calculating $140,000 of gain. I asked him, how much do you think you really made? And he said, well, I think I made like 90, so it's coming in about $50,000 too high. And, he was uncomfortable with that. and I said, here, look, here's what happens when we do gain calculation. We are very unique. We give you a fixed price right up front. We'll validate it against the data, but we give you a fixed price and we stick with it. We're not going to be like those companies that keep asking for more money to do their gain calculation for you. Typical price is around $6,000 for a gain calculation. And I told him, I said, look, if I can say, let's say your correct number is 90,000 and I can calculate that, I've saved you the taxes on 50,000. The taxes on 50,000, is going to be in the 20 to 30 $1,000 of tax, but our services are only 6,000. So it doesn't take much before you start to realize, why should I beat my head in the wall doing gain calculation myself when I can have a professional firm do it, as well as get a bulletproof tax return? So again, if you're a medium to active, high active trader, you might want to consider using our firm. But all the other software products that Ben mentioned do their job well, as long as you understand their pros and cons. So I do want to affirm that.
Yeah, I think that's half the battle, is understanding, how the software works, what their weaknesses and strengths are, and trying to kind of finesse that. We have, with our team, we have 6 analysts on our team that have 3 years experience doing this, working with not just coin tracking, but multiple software. So we understand, the issues that these crypto tax calculating services are dealing with. And I prefer to try and work through those problems, and even with those companies. So.
Yeah, exactly. I mean, we have one client. We've had clients who had over 5 million transactions per year. Another client had 75 DeFi wallets that we had to reconcile, but we got it done. We didn't panic. We got it done. Ben's team is awesome. So if you are interested in us doing the work, just go to our website, CryptoTaxAudit.com, go to the contact page and schedule a consultation. Next question.
Yep. Can I switch from a global allocation plan to a specific identification plan if I document the change? Do I need to email it to your team or keep it in my own records? This is a really good question. I want to just make a correction here first, is that there's no such thing as a specific identification plan. It's called a specific unit plan. And I might be, be nitpicky here, but the reason I say that is because specific identification is a disposal method that is still allowed by the IRS going into, the 2025 tax year. But with specific identification, there's really hard requirements to meet. Your books and records must be up to date. And then to use specific identification, you have to identify the unit of cost basis before you make the transaction. So that's if you're making a transfer from your ledger to Coinbase, you identify that unit and you write that in your books and records, saying that you've made that you've chosen that specific unit of cost basis. If you're on a centralized exchange like Coinbase, you're supposed to tell Coinbase which unit of cost basis you want to use for the sale before it occurs. Now, I'm not sure what Coinbase or these other exchanges are going to offer in this, for specific identification, but I just wanted to make that clear. So going back to the question, can I switch from a global allocation plan to a specific unit allocation plan? Well, the specific unit allocation plan must be completed. You must actually do the allocation by January 1st, 2025, or the first transaction in 2025. So you would have to reconcile all of your 2024 transactions and then do the allocation before your first transaction in 2025. So, time's running really short on that. If you're able to make the switch, reconcile all your transactions through 2024 and do the specific unit allocation, you still have time, but not a lot. This is a very complicated thing to do. And I would, if you're doing specific unit allocation, you need a professional. I mean, even just for the global allocation, you're going to need, the help of a software or a professional. So, time is out for the specific unit allocation for most people. But so I would recommend sticking with that global allocation plan going into 2025.
It's our opinion that the specific unit plan that Ben had talked about is, and the specific identification rules ongoing constitute an unmanageable burden for the taxpayer, and that unless you're a corporation, that the individual would be unable to do that. If you can't track exactly at any point in time what the cost basis is of every single unit you have, then it invalidates any specific identification you made in other places. So it's, as you all know, I mean, this would be like, it's like a shell game, moving your cost basis around wallet to wallet to wallet. Well, if you're wrong, the whole thing is thrown out. So we just think it's just simply unmanageable, and we don't advise anyone to even consider using it.
If you only bought crypto and placed it in a cold wallet, didn't sell any of it, do I have to do anything? I still, in this case, I would still recommend doing the global allocation plan and taking the inventory snapshot, because I don't know all of the details surrounding your situation. A lot of people come to me and they describe their situation, and it's very simple, and then they start talking more and more, and then it just becomes more complicated. If you own crypto from 2024 going into 2025, you need to do the global allocation and you need to take that inventory snapshot. There's no downside, there's no negative impact. Hey, if you do it and later you realize you didn't need to do it, well, there's no harm. But if you don't do it and you find out later that you should have done it, well, you missed the deadline. So just do it, those two steps. It's that simple right now. There's 3 or 4 days left in December of this year. Just do it.
Just do it.
Can we calculate a new average cost basis using December 31st, 2024 screenshots, or do we use the initial purchase prices? This is a good question. I think there's a lot of confusion around this one. What the cost basis is going to be going into 2025. It is not the average cost basis that is on, of your assets on December 31st, 2024. This allocation is the initial, purchase prices or purchase cost or cost basis that is reconciled on your books through December 31st, 2024. And then we make that allocation to what is actually held in your wallet on December 31st, 2024. Now, this part kind of confuses people, and the reason is it all goes back to this universal cost basis tracking approach, where it's in the past, a lot of people, majority of people were treating all of their accounts and wallets as one pot or one account, and the cost basis got kind of jumbled, and nobody actually knows where, what the cost basis of their wallets are. They know like their overall inventory and the cost basis, but not each specific wallet. So we're actually going to be taking the inventory snapshot, the global allocation, and the calculated cost basis, and we're going to allocate them to your actual inventory. So it's going to be the original cost basis of the assets going into year 2025.
That was a very good explanation about what the IRS is changing. The IRS is changing two things in how gain is calculated, different from the prior guidance. First of all, you're required to use a by wallet approach, whereas almost all the tools, whether by default or their limitation, we're doing everything in kind of a universal wallet, like all wallets are kind of thrown together and treated as one. All right, but now IRS is requiring each wallet be treated separately. That is to say, if I am selling ETH on Coinbase, then I have to select the cost basis of a ETH coin that's on Coinbase. Whereas the prior method, under the old guidance, you're allowed to, from a tax point of view, consider sold the ETH that was like the highest cost one on any wallet that you have. And so that's what Ben means when he got jumbled up. I thought it was a very good phrase. And this is changed by the new IRS regulations. And this is the urgency that we have. In addition, there's the FIFO-HIFO change as well.
All right, next question. Does Bitcoin at Fidelity and in IRAs, I trust, require a snapshot? What do you say, Clinton?
Well, I think Fidelity, first of all, we don't have to worry about ETFs, right? We're not worried about that. This applies to Bitcoin that you hold in your name. So the Bitcoin at Fidelity, yeah, you take a snapshot. If you have IRAs, I trust you want to take a snapshot of those. Snapshot everything. We'll sort it out later, okay? It's probably the best rule of thumb. Snapshot with timestamp everything, or get a screenshot. And we'll sort that out next year. We have a lot of time under our safe harbor allocation plan to work out the allocation mapping in these particular situations. Okay.
Coinly is only offering one method when migrating our accounts: lowest cost to biggest wallet. Do you think this is an acceptable method? So this is taking the lowest cost basis and allocating it to the wallets with for my understanding, is the wallets with the highest amounts or the most amount of cryptocurrencies in there. I think, there's, a lot of different methods that you can use out there. They're all going to be slightly different. There's all going to be advantages and disadvantages to them. To figure out, which one is better than the other, that's just going to depend on your personal situation. The safe harbor plan that we developed, we think this applies and will be beneficial to most, if not all, taxpayers. At the end of the day, when you go to sell cryptocurrencies, you're going to have a realized event. So at some point, you're going to, sell these, and you're going to realize a gain that you're going to report. By, these different allocations are just going to change how that gain's going to look like potentially in the future. There, with this specific, per wallet, there's some other strategies that you can do to get around, trying to figure out what cost basis you want to sell, and making sure you're either going long terms or using, the highest cost basis. If that's something you're interested in, that's something that you have to do in the new year, basically by setting up different accounts or different wallets for different, and I don't want to go too much into that right now, but if that's something you're interested in, give us a call. I think, the important thing is having an allocation plan. And, they're trying to look out for their customers just as we are.
I'd also say this, because you're welcome to go back and check our YouTube page. We've been talking about these issues for several months, since September, and we can prove it. We've been looking at our history on X, our tweets. We've been really talking about this. Sadly, most of the crypto gain tax softwares are only here in the month of December waking up to the urgency of this. And they're proposing inadequate solutions. How do I know they're inadequate solutions? Because we go to tax court to defend people. We know what the evidence rules are, and et cetera. So you have to, under the new revenue procedure for the safe harbor allocation, you have to adopt it for your books and records under tax section 6001. You actually need to be able to prove that you adopted it. So you need a timestamp. All right. We're doing that for you on our website. We're giving you an e-signature timestamp. I've seen Coin Ledger basically came out with a blog post. They said, save this email, and that's your proof that you adopted it. No, that's merely saving an email. It's not proof that you adopted it. All right, that is wholly inadequate from an evidentiary point of view. Secondly, it's nice that Coinly has a method that they're going to map it, but they're not giving you a safe harbor allocation plan that you can adopt with a timestamp before the end of the year. All right, so all these services are only giving half-baked solutions. So I really want to emphasize how important it is to at least adopt ours, even if you want to modify it later. Secondly, the mapping, as Ben said, from lowest cost to the highest wallet. Well, the biggest wallet. Now, that's fine. We typically want to put the lowest cost on the coins that you have not on an exchange, right? Because typically on an exchange are going to be coins that have the highest cost basis, ones you recently bought, all right? And you're going to keep your lowest cost basis would be related to ones that are on hardware wallets, as Ben was describing. So that's the methodology we've taken. And that works differently than what this Coinbase proposal you're laying out here. So just be aware. Ultimately, there's only so much gain, and you're going to pay tax on all of it eventually. Our strategy is to try to maximize how much of it is done in long-term capital gain rates. So that's a great question, and we'll tease that out more next year in the AMAs. When you sign up for our Safe Harbor allocation plan, you'll go on a mailing list, and we will let you know about the AMAs next year, about how to do your own mapping. We're doing this all for free. We're not charging for people to have these AMAs and the allocation plan. We don't charge for any of that. It's free to the community, and we'll show you what you need to do your own mappings next year. There are a couple more steps involved. Great question. Next.
I also want to add, on our website for that inventory snapshot, we have instructions on how to do that. So if you still have questions, go to our website, go to CryptoTaxAudit.com/1099. At the bottom of that page, there's going to be a link to a blog post that talks about the inventory snapshot. All right, next question. If I have done anything since signing the global allocation plan, does any change of inventory require me to revoke / re-sign another version of an allocation plan? No, that does not. So if you've agreed to and signed the allocation plan, and you've then made transactions after that, that does not affect the allocation plan. You are fine. You still want to take that inventory snapshot on December 31st. And again, do not make any transactions until January 1st after doing the inventory snapshot. If we are doing our allocations on 12/31 as well, is there a methodology or process in terms of screenshotting, timestamping our allocations that you recommend? So this would apply, I think, to that specific unit allocation. So you're actually doing it on that date. I think just document how you're doing the allocations, document when you did the allocations, and I think that would be enough. Just document that date and time. But again, if you're doing the global allocation, the actual allocation will be done in year 2025. The global allocation does not need to be completed until you file your 2025 tax return in 2026. So you have time to do the global allocation. There's no rush. But if you're doing that specific unit, yes, document how you do it and have it done by January 1st, 2025.
I want to pick up on something you said on the last answer, Ben. I thought was really good. You don't have to do all this work on the 31st. I mean, if you want to, you want to get ready for a party, you want to do this documentation work on the 29th or the 30th, that's fine. Just don't do any more trades for the rest of the year. If you do a trade, make sure you capture screenshot documentation that happens so we can make the adjustment. Secondly, it's not just a matter of capturing the screenshots, but you want to save them. You want to save them someplace safe, because while we'll be referencing them in 2025, you'll need to save them for many years, probably for the next 3 or 4 years, in case there is an audit. So you want to make sure you definitely save this information. You might not remember what you did 4 years from now, so make sure it's well annotated, and a screenshot with timestamp is the best way to do that.
And not just any trade, any transaction. So if it's a deposit or withdrawal after you do the screenshot, you're going to need to retake those screenshots. All right, next one. What do we do to our lots, our tax lots, if we have more tokens to allocate than in our tokens inventory? this is going to be a problem for a lot of people. I don't think this is going to be an uncommon problem. I quite frankly, I think it's going to be a common problem where, the tax lots that you've, calculated, there are you have more of them than what your actual inventory says. In this case, it's going to be from maybe, one of two reasons likely. Either you did not do the reconciliation correctly, and there's an issue with how it was done. Maybe not all the transactions from the blockchains were pulled in, or maybe you uploaded a CSV file incorrectly, and you'll need to review your reconciliation and figure out where that error is. The second reason, which I think unfortunately is going to be all too common, is missing data from exchanges that go under, from exchanges that kick U.S. citizens off, from exchanges who just quite frankly provide bad transaction records because that's not their priority. We have a lot of clients who deal with this, especially, when it comes to like KuCoin, Binance, these, foreign exchanges, there's missing data. We pulled, 1 year we were pulling in API key data from KuCoin. Well, it was only pulling in like half of the transactions. And even then, when we requested CSV files, the CSV files were clearly not complete. So, what can you do in this situation? I would recommend that, you get in contact with us and we can help you work through a situation like this. We can review the reconciliation or we can do it. And we can also, take steps to figure out what to do with these extra tokens. If you DCA'd from 2021 to 2023, can you sum up the cost basis for that period and use the average for all buys of the tokens before 12/31/2024 for your snapshot? No, this is not an acceptable method under the IRS revenue procedure or the new IRS regulations. If no returns were filed for 2 years and most transactions were on KuCoin, which no longer supports US traders, can you still use the safe harbor plan to move forward? Absolutely. Yes, do the safe harbor plan. There's no downside or negative impact to doing this. But if you don't do it and you were supposed to, then there could be a negative impact. Sign the safe harbor plan, do the inventory snapshot, and we can figure out the rest in 2025 and make it right. If you already overpaid in taxes in past years with the prior method, will the new rules matter as much?
Well, if you overpaid in taxes, and I'm not sure exactly how, I'd like to understand more about the question. If you overpaid, that is to say that you have a refund, well, that's not going to be an issue that can be applied to future returns. If you realized that you overcalculated your gains on prior returns and you should have reported a lesser number, then you have a limitation under the law of 3 years from the time of filing it to amend that tax return to correct that amount. So I would definitely, if you're going to save enough money to justify the cost of it, then I would go ahead and do it.
Please elaborate on the necessary steps before December 31st and what can be accomplished between January 1st and tax day. So, again, before December 31st January 1st, you want to adopt an allocation plan and do the inventory snapshot. Adopt that allocation plan before the end of the year. It's on our website. And then that inventory snapshot, there's instructions on our website. Do that on December 31st, 2024. Don't make any transactions after you do the snapshot. And that's all you need to do before the end of the year. Now, between January 1st and tax day, it's going to look more or less like any other year. You're going to reconcile the transactions for 2024 and then report those gains on your 2024 tax return in 2025 before the tax deadline, including extensions. So either April 15th or October 15th. And then after that, that's when you're going to actually do the allocation. Maybe you do the allocation in conjunction with reconciling your 2024 transactions, but you're going to have to reconcile them first and then do the allocation according to the global allocation plan that you adopt.
I think that great answer, Ben. I would add to that or clarify that this year, safe harbor allocation plan, the inventory. Get that done this year. You should do it right now on the phone call while we're doing it. Secondly, next year, do your taxes the way you did it the prior year. If you did it, if you're using any of the gain calculation services, continue to use those services. Continue to use the same settings that you used in prior years. Okay, there's nothing, because all the new regulations apply to trades and transactions in 2025, but you're calculating taxes on 2024. Okay, so keep everything the same. Don't change any settings, whether it's on CoinLedger or Coinly. Don't change any of those settings. It's business as usual. Okay. Once you've done that gain calculation to do your tax return, then afterwards, we have to do the mapping, which may involve some modifications. We'll send videos out, or we'll have AMAs to talk about how to do that, or you can hire us to help you. But that's for later, right? We have a lot of time to work out that. Next question. I'll talk to this. Right.
Sure.
Hey, first of all, these regulations for the new calculation of crypto gains came with an act of Congress in 2021, the Inflation Reduction Act, which issued new laws in section 6045, pardon me. And these are regulations which tease out some of the necessary implications that are required for businesses to comply. All right. So the Trump administration has been saying a lot of things, and there's talk of revamping the tax system, and it goes on, right? Very creative stuff, even no taxes on crypto. Let's be clear about one thing. President Trump cannot change the tax code. All right. Congress has that authority. They're the only ones who can change it. Secondly, Congress rarely does things retroactively with taxes. Okay. And the talk of, my gut feeling on this is he's talked a lot about tax reduction, but generally for people that make a lower level of income. And by lower, I only mean like, does everyone on this phone call realize that 47% of American taxpayers pay no taxes at all? Do you realize that? Either if they have taxes collected on their payroll, they then get tax credits as a child tax credit, earned income tax credit, other ones that basically wipe out any tax bill they have. Many people get refund. It's a form of welfare in this country. So it's really the remaining 53% making more money that are going to be subject to taxes. Now, I think if we read between the lines here, I mean, so Trump can reduce taxes like no tax on tips, but the people that make tips are probably in that lower 47% of American income makers. All right. So not tax their tips is kind of like selling the sleeves off your vest. All right. So it's not as exciting. It won't affect you as everyday basis. Now, one thing we know about Donald Trump is he's really upset about the deficit. The deficit's way out of control. He can slash the spending, but he needs to keep the income coming in. And the IRS has identified that there is a large gap, about $1 trillion per year, that's not being collected. And IRS commissioner has identified that the major group causing this $1 trillion shortfall is crypto investors that aren't paying their taxes. I do not think that Donald Trump is going to stop. I mean, he wants to make money. And right now, crypto investors, we know about 75% of all crypto investors are not reporting all their crypto income, not paying their fair share of taxes according to the IRS. So I do not think Donald Trump is going to Stop this. The IRS is the money-making side of the U.S. government, and Trump knows how to make money. And so he may slash management, he may get rid of a lot of regulations and stuff like that, but he's definitely going to go after it. One of the things he's definitely going to go after is the IRS has a plan to bring on. Right now, they have 8,000 auditors. They plan on bringing on 29,000 more auditors during the next 4 years in the Trump administration. I have every expectation that Trump will continue to do that. I see no reason why he would want to stop bringing in money to the U.S. government. He wants to pay down the debt. So that's my answer on that one. Great question. We'll have to wait to see. And remember, Trump can't change the tax laws. Only Congress can. Next question.
I think just to recap on that last one, do the safe harbor plan, follow the revenue procedures. Don't bank on, something happening in the future when you're risking your taxes. I just don't think that's worth it.
There's no downside.
Yep. So on to the next question. How should you handle NFTs reissued on Polygon after buying them on ETH? Well, if they're reissued, they would have the same cost basis as the ones that were purchased on Ethereum. Similarly, if NFTs bought on Magic Eden were reminted to another ERC, sold, and now you hold SOL, what next steps should you take? We're trying to focus on the new regulations here. With this question, come to us, email us, and we'll help you out with this type of problem. But we can handle it. But right now, we want to get to the questions about the safe harbor. I'm setting up a Wyoming LLC with Jake Claver and onboarding XRP, XLM, XDC to Anchorage Digital. If I stake, trade, or liquidate there, do I still need the safe harbor, or is it for self-custody? Yes, you still need the safe harbor. I would do it. I don't know what Anchorage Digital, what their practices are in terms of record keeping, how they're going to be reporting to the IRS. I would do the safe harbor. There's no downsides, no negative impact.
If you have Jake does some clever things, but the bottom line is you should definitely sign up for a safe harbor plan. If your Wyoming LLC has more than one owner or member, then I would create a safe harbor allocation plan for it also. And secondly, you should take inventory snapshots all. It's better to be safe than sorry.
I'd also just like to mention these year-end inventory snapshots that we're discussing for the safe harbor. Really, it's a best practice that you should do every year. You should be aware of how much you hold, at the end of the year, and have a record of that year after year. So if you get audited and the IRS recalculates your gains and they show that you're holding 100 Bitcoin and you have tons of gains, you can say no, that's wrong. There's no way I had 100 Bitcoin at the end of the year. So it's a best practice anyways. Moving on to the next question, does safe harbor require 100% accuracy for all assets, or can it be applied selectively? What about insignificant amounts, like a few dollars stuck in old accounts that you can't access anymore? Good question. So if a lot of people have wallets that they don't use anymore with dust in them, low amounts, maybe $5. I don't think anybody's worried about those. You do not have to take snapshots of those accounts, if you're not going to be using them anymore in the future. There's nothing in there, or just a few dollars. Don't worry about those. Focus on your wallets that have where you're holding assets that you use or intend to use. Do
your best to document everything. Do your best. Yeah. If it's impossible, you couldn't do it, then make a paper note what you couldn't do. All right, but do your best to document everything.
Yep. I plan to sell all of my crypto holdings in 2025. How does the safe harbor affect me? This is, a good question. I think anybody holding crypto assets in 2024 going into 2025 should do the safe harbor and do the inventory snapshot. So agree to that safe harbor plan, do the inventory snapshot. You don't know what the future holds. You're saying that you might sell everything now. In that case, the cost basis is what the cost basis is on all of your sold assets, but you're going to need this safe harbor to protect you from using alternate methods in the past that the IRS, is now saying cannot be used.
I should just add on and maybe kind of make this the last question. The purpose of the safe harbor plan is to protect your prior year calculations from the retroactive application of the IRS's new tax regulations. You're trying to protect yourself. So yes, you plan to sell everything in 25. You still want to protect your old calculations. You definitely want to sign up for it. I can say at this point in time, whoever you are, if you're a crypto investor, sign up for a safe harbor plan and inventory yourself. There's no downside. IRS gets none of this data, and it's a best practice that you should do, at least keeping the inventory as Ben described. And we will, when you sign up for the safe harbor allocation plan, you go on a mailing list. We'll be sending out more information about what's involved, what's going to happen. If you're somebody listening to this video after January 1st, shortly thereafter, January 1st, I highly recommend you to still go sign up for a safe harbor allocation plan, even if it's after the deadline. I can, in tax court, make a reasonable argument that you did your best and you tried, and we try to document the best you can. So if you're listening late, after 2025, still sign up, still do an inventory at the time that you have it. We can try to backtrack into information should you get audited. So that being said, a lot of people have a lot of remaining questions, and I'm really excited about all the questions that were asked. Only got to answer a fraction of them. Some people have been emailing us, and quite frankly, it's the end of the year. We're on vacations, so we're not going to be able to answer your specific questions. So I don't email us about your specific questions. Many of your questions have to do with how do we apply the allocations next year, and we will have ample time to discuss and tease out those issues with you. And we're also waiting on services like cointracking.info and maybe some other services to develop mapping software to map your existing hardware inventories to the new tools. So, we're looking to see what that's like, and we're happy to work with any service that wants to talk to us about how to make that process easier and seamless to reduce the amount of errors that a taxpayer may have. Thank you very much. I hope you have a wonderful Christmas. I hope all the coins go up and that we have a giant green year in 2025. And it's been really a pleasure. If you have any friends who, you might want to refer to them to sign up for the safe harbor allocation plan, listen to this AMA, which we'll be posting live on Twitter shortly after this call ends. And so you can have a replay. Encourage all your friends to do this. This is a one-time only window, and it's a very short window that the IRS has given without a whole lot of advertising to people what they need to do. So sign up, the allocation plan, take the inventory, celebrate your gains for this year, and I wish you all, I think for Ben as well, have a happy new year. We look forward to talking to you again next year. All our best.
Happy New Year.